All right. Today, Michelle, you and I are talking about firefighters and the experience I've had with them and some of the experiences that you're having as you sort of start to talk to firefighters. They have a very unique work schedule that makes them a little bit different than, people that are working sort of the normal 9 to 5, right? A lot of them work 24-hour shifts where they're in the, what do they call that place? The firehouse, right? The station.
Yeah.
And they're sort of on call, but it gives them a lot of time off. So I have seen probably the most common denominator over the years with firefighters is they all seem to have some sort of a side business. They're doing photography on the side, or own a restaurant, or do landscaping or whatever, which is pretty cool because they can sort of simultaneously have their income, build up their pension, build up their retirement, and then retire at kind of a fairly young age from firefighting and step into a business they've been building on the side, which is kind of awesome. Also, that side business creates a lot of income, disposable or discretionary income that they could use perhaps to fund their retirement if they put it in the right places. Does that make sense?
Yes.
So let's teach firefighters, in this little introductory video, you and I like to do this kind of the same way each time, which is give somebody something super easy, non-threatening, that's 5, 10, 15 minutes long, to kind of see who we are and what we do, and then start to open up the arsenal of educational opportunities. Get paid to join a focus group, watch a webinar online at no cost, have a consultation, have a free second opinion done on your finances, whatever it is. But we always start with something like just super educational and useful that doesn't take very long. You and I do that, right? So
Yes. Very helpful.
let's talk about our main problem we're having in retirement planning, whether somebody's a firefighter or not. This definitely applies to firefighters, but also kind of applies to everybody. And that's the gigantic reduction, just a huge reduction in earnings in the stock market. The stock market was the staple place to put retirement accounts, like 457s for firefighters, or 403bs for professors or educators, or 401ks for the rest of us, IRAs, things like that. Pretty much everybody today that I meet still has their money invested in stocks, bonds, and mutual funds, or what we call the market. And the reason is it grew in popularity from 1970 to 1999 because of the growth potential was crazy. You've heard more risk equals more reward. And boy, it did back then. Yes, there were ups and downs. So if we look on the left-hand side here, hey, 1974, look at 73 and 74, 15 down, 26 down. And that's painful, right?
Yeah.
But was it worth it? Yeah. Next year, 38, and then 24, and then a little hiccup, and then boom, boom, look at this, 32. So the losses, the risk used to be worth the reward, because during this time frame, CAGR just stands for compound annual growth rate. It's a little more accurate than average. This is, what if I made a steady return the entire time and it compounded? It would be almost 14% for 29 years. You and I both agree, if there's something out there that, you get some hiccups every now and then, but it can make 14% compounding, we'll take that all day long, right?
Yes. Definitely. I don't want to lose.
No, the issue for those of us that pay attention, for sort of the cream of the crop financial advisors that I can find out there, we don't just take something that was true, 19 years ago, 30 years ago, and say, well, I kind of hope it happens again, especially with this giant group of people called the baby boomers, that are turning 62 at 10,000 a day, 10,000 people a day, and starting to take money out of the market. I'm not sure we're going to see this recover and kind of come back to those 14%, years for 29 years in a row. What we've seen in the last 19 years, before you pay a fee on your 401k, 457, or your advisor fee in an IRA, whatever it is, it's only been compounding at 6.01. This is before the crash of March and April of, or I guess it was April, May, June, the coronavirus mess of 2020, where the market crashed. This is before that, Michelle. It's only been averaging 6% for the last 19 years. It's just not enough. You can't grow your money like we used to, and definitely could not sustain any sort of high income, or what we call a withdrawal percentage. It used to be safe to take about 4% per year out of an account, and it would last as long as you did. But that's down to about 2.8 now, and these low numbers are kind of messing that up. So what does that mean? So what does that mean for you and I? That just means, you good?
Sorry. Hold on. Are we still recording?
Mm-hmm. You want me to pause it?
Yes. Sorry. Oh my God. Hold on. I need to call you right back.
Okay. Oh, you're talking to somebody.
No. Okay. Oh, Charlie. Oh my God. My computer connected to my phone. I didn't expect that to happen. I tried to turn it.
That's funny. We're good. We are good.
3.
Ready?
Okay, wait, let me turn this off. Dang it. Let me try to turn the Bluetooth off. All right. All right. Okay.
So what this really means for today's saver, for today's investor, as you and I have been working with, pre-retirees and retirees, is we just can't have it be as easy as it used to. It can't just be have a diversified portfolio of stocks, bonds, and mutual funds that's mostly stocks, a little bit of bonds, and then as you go into retirement, it's mostly bonds and a little bit of stocks. We can't do that anymore and make it that simple. We have to look outside. And so you and I do things, on Thursday nights right now, we do these focus groups, right, on alternative investment ideas, investments that don't go down when the market goes down, or, have never gone down, or, contractually won't go down, things like that. We've got to open up our horizon and get a little bit more creative than our parents did, because the market's not delivering the same growth that it used to. So one of those, this, is land banking. A lot of people have never heard of land banking, because why would you ever have to hear of land banking if you're making 14% in your easy stuff, right?
Right.
And land banking is really simply find an area in the country where the two biggest land banking companies in the world, which are Walmart and McDonald's, actually in the other order, McDonald's is the biggest and then Walmart, find some area where they believe 1, 2, 3 million people are going to be moving to the area in the next 10, 20 years. Look for places where they're building tons of Walmarts, tons of McDonald's, and then look for supporting evidence. Warren Buffett, Ted Turner, Arnold Schwarzenegger, all those people also buying up land in the area. Look where the hotels are exploding and schools are being built. In this particular area, there's an international airport going in, a high-speed train. The Olympics is going there. If you can find an area like that, here's the kind of things that happen. This was from 1994 to 2012. So we had a 17-year period where the appreciation, the average appreciation during the 17 years on property was 30% per year, if you can imagine. Now,
Very
if
impressive.
we throw away the top and bottom 10%, and we're still at a 24%, compounding for 17 years. And how often did you have to hold a property until somebody bought it and paid you your principal plus your profit? It was under 4 years, just over 3.5 years. Now, is past performance going to equal the future? Can we guarantee? No, exactly what I showed you in the stock market. Used to be 14 for 29 years, and now we've been averaging 6. So when things change, we've got to change. So right now we're taking some portfolios and taking pieces of it, 10%, 20%, 30%, depending on somebody's aptitude. Some people leave the stock market and put everything in alternative investments, but one of them that really deserves to be looked at and understood and considered to be a part of the portfolio to bring those returns back up would be land. And you agree with me on that, right?
Absolutely. Even though you and I, we were looking at it during the study, right?
Yeah.
The stock market was only at the top of 8%.
Yeah, if you look at the stock market, here's something that's totally different about the stock market and land. Is the stock market is this fluttering kind of all over the place, up and down, check it every day, who knows what it's going to do kind of a thing. It's got a lot of volatility, right?
Mm-hmm.
And you hope that volatility goes in your favor and you sort of zigzag up over time. Here's 5 years. So if you look at the stock market, look at it, it's right? When we map out land values, there's no ups and downs like that. They start low and just steadily go up forever because they're not making more land. It's not publicly traded, right? It's not
Right.
based on some company's profits. There's no CEO of land who gets caught in a scandal, right? And the land, drops in value. All of a sudden, no one's going to live in the Antelope Valley because somebody that owned a hotel got caught cheating on his wife. It just doesn't happen. It's not a volatility thing. It's everyone needs a place to live. Even after the coronavirus, we still need physical gas stations, and companies still use businesses. Some people are going to work from home, right? But land values are not correlated to the stock market. They just have gone up, 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 up over time. Mark Twain and all kinds of people have these quotes, don't wait to buy land and wait, blah, 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 right?
Mm-hmm.
All I'm saying for this conversation is here's 24%. Here's 6. Here's what the market's done. Here's what land did for that 17-year period. And it seems to have done even better since 2012. If you put $100,000 somewhere and waited 30 years at the 6%, what the market's been giving us, you'd have just under 600,000. In the land, you'd have $63 million, Michelle. This means these are very different tools. Does that make sense?
Oh yeah, and makes you want to put more in, doesn't it?
It does. And you could do things like this. You could say things like this. What if I only put $60,000 of my money in the market, but I took a 40% share and diversified and put it into land? All of a sudden now the stock market gives you 350 basically, and the land gives you 25 million bucks. So you kind of want, I mean, you hear this all the time. Diversification, diversification, diversification. Don't put all your eggs in one basket. It's never been more true than now that you should not have all of your retirement accounts just in securities, the market, stocks, bonds, mutual funds, REITs, ETFs. It shouldn't all be with your broker. You want to do some things. Nobody cares more about your money than you. You want to do some things on the outside that aren't through, whatever, Jones, Merrill Lynch, Morgan Stanley, Fidelity, Schwab, those kind of traditional mutual fund companies. You want to have some things that are not securities based. You and I also talk frequently about taxes, right? Do you think taxes are going up, or do you think taxes are going down? If I were to ask any firefighter, what do you think's going on with taxes between now and the day you die? Do you think they're going to go up or going to go down? I don't know what your experience has been, but 16 years in, asking, tens, if not hundreds of thousands of people that question, pretty much everyone says, I think taxes are going up, right?
And another question I ask is, if I could show you a way to pay less taxes and give you a raise in retirement, would that be of interest to you? And the majority of the time, I get a yes.
Right. And if people are kind of paying attention, you say, well, have you seen this before, by the way? This debt clock?
Oh, yes. I haven't seen it recently.
Like, why do we believe that taxes need to go up? Well, before the coronavirus bailouts or like stimulus packages, right? Before we sort of printed money and helped everybody, we already were scheduled to drop Social Security by 30% come 2030. We couldn't afford Medicare. We couldn't afford all the promises we've made, right? I think it was pretty soon, it would be like 92 cents out of every dollar the IRS collects would go to just 4 programs, right? Wasn't it Medicare and Medicaid and Social Security and one other one? So, politicians have to do one of two things. They have to tell this giant group of people called the baby boomers, basically everybody, well, an even bigger group, everyone who's still alive but retired and on Social Security, they have to tell them they're going to cut their benefits in half, according to David Walker, or they have to double taxes. What we believe, and when I ask people what they think is going to happen, they believe that taxes are going to start creeping up. All the money inside of IRAs, 401ks, 457s, 403bs is yet to be taxed, and it's just too tempting, in our opinion, for the IRS to not raise taxes when they need revenue, right? So there's only 3 places in the entire country that you can put money and live off of it completely tax-free, and you're spot on. You and I do that all the time. So if I can increase your income by 30, 40, 50%, by getting you into a 0% tax bracket, would that be helpful for you? Would you like that? Would you want to learn more? And pretty much everyone says yes. So whatever comes of this video, if you're sharing it with people you know or don't know, or how people get their hands on this, one thing that we can offer by having a conversation with you is to show you what life would look like in a 0% tax bracket and how much more you'd be keeping, or kind of show you what life would look like, possibly even if you divorce the stock market. The stock market's not a necessary tool. All of the safer tools from 2000 to 2019, all of the safer tools that we use made more rate of return than the stock market. We actually grew the money better without the risk than people that have the risk. So you don't need the stock market. But you and I know firefighters have one wonderful thing in their life that can mess up a 0% tax bracket. What do you think that is?
Does it begin with a P, Charlie?
It's the P word.
I love working with you.
It's the P word. Yeah, pension. Pension is good news for income, wonderful news for your life, kind of bad news for 0% tax bracket. Just there's this thing called provisional income, and the way it's calculated, if you have no pension and all your money's in 457s or IRAs, we can do Roth conversions. We can keep your income under the standard deduction. We can do all kinds of wonderful planning techniques to keep your provisional income, which is a term most people don't even know, but it's one of the most important things for your retirement planner to understand. We can keep that provisional income.
Really quick to the ones who don't know what that is.
Yeah, provisional income, and it's probably easier versus explaining. It's probably easier to just look it up, right? How provisional. Most people have never even heard of this. And really what provisional income is, we're talking about something called the tax torpedo. It's how does the IRS decide whether they're going to tax your Social Security benefits? Now, I don't want them taking, I'm self-employed, so I'm paying both parts, the employer part and the employee part. I don't want them taking money out of my paycheck and mismanaging it and then giving it back to me at their schedule and deciding whether or not they give cost of living adjustments or not. It's just that if I try to get out of it, I go to jail, right? So
Mhm.
Social Security is already imposed upon me almost like a tax, right?
Yeah.
Now, then they give it back to you. You have no account. You can't take you can't say like, give me the $500,000 you took from me and let me go manage it myself. There is no account. It's just a lifetime annuity, basically from the IRS or from the government, and they give it back to you on their schedule. And then they're allowed to tax it, which is crazy, Michelle. Like crazy. The money they took from you that doesn't have an account anywhere, that they're giving back to you slowly, they're allowed to keep some for themselves and tax it up to 85% of it. So if you're making $3,000 a month, they can tax up to 850 bucks on every thousand, right? Well,
Right. How much time we sacrifice,
it's
money, and
it's offensive. This is the type of planning that has the most emotion. People are like, I do not want to pay tax on my Social Security, and that's why we've blown up in the success of Renovating Retirement, my podcast, and your business, and it's why it's working, because people want this type of planning. They want to keep as many of those hard-earned dollars as they can and not give them to someone else, including the government, right?
right.
So let's look at a joint filer. You don't have to be married to do this, but I'll just look down here. And it says, if your provisional income, and these numbers have not been adjusted in just decades, if your provisional income is over 32,000, you'll be taxed on up to half your Social Security income. If you're over 44 as a family of provisional income, now you can barely live off of 44 in most places, and this is not inflation adjusted, right? We're not talking about people that retire 10, 15 years from now. Then they can
Right.
tax almost all of it. They can tax up to 85% of it. Well, what's included in it? The most important thing for people to understand what's included in it is pension income and IRA and 401k and 457 distributions from pre-tax plans like you have through your employer, right? And if you
Mhm.
don't have a pension, we can do fancy things where your standard deduction, we can do fancy things where you don't have any taxes due on your Social Security. But the great news of having a super high pension, if your pension's like $300 a month, no big deal. But the great news of having a super high pension, 3, 4, 5, 10, $15,000 a month, is your life's going to be incredible. Bad news is you will have the displeasure of paying some tax on your Social Security, but you probably won't feel it because your pension's so high, right?
That's nice.
So for firefighters, our second opinion service, which if you guys, if anybody listening to this wanted to see kind of what we do, you can just go to goodnewsorgoodnews.com. I purposefully provide full disclosure before anybody has to talk to, quote, a salesman, which is really scary. And we're not really salesmen, but before you have to talk to anybody, you can actually go check out everything we're going to do, everything we offer. Michelle, I even recorded a video before your first conversation with Charlie Jewett, or what to expect when you jump on the phone, right? But this
Right.
website, goodnewsorgoodnews.com, talks about our second opinion review where, listen, if everything's perfect, if you're a firefighter and you're on track and you got a bunch of money in your retirement accounts, your pension's cooking, you have a side business, you're putting money away, and we review it and look at it, your mortgage plan, estate plan, retirement plan, insurance plan, and tax plan. We do the most thorough review on the planet at no cost. And there's nothing to improve upon. I'm going to come back and pat you on the back verbally, praise you up and down. You're going to sleep really well at night, and I'm probably going to try to hire you as a financial advisor on my team, because that would be an accomplishment, Michelle. If somebody had everything right in all 5 areas of the retirement plan and literally couldn't make a single improvement, that would be stellar, wouldn't it?
Well, yes, and definitely, and also, firemen go out and help and protect and serve others, and that's you and I. I mean, our heart is to serve others, and the thing that I really enjoy working with you, Charlie, is because I spent 2 years to find the best retirement company out there, and I'm so blessed to get connected with you, and I just love it how. I mean, your background is education. I have a background in education. It's just all about teaching and informing people.
Yeah. I mean, it's fun at the top, right? It's fun to be the best in class and to be the best at what you do and to be the Michael Jordan of retirement planning and to work with third-degree black belt retirement planners. It's just so much more fun because you see, well, you can do more good for the client, and then you see the client's face light up when they see what they're, they can retire right now or what they're how improved it could be. And they go, I didn't know you could do that. And you go, I know. Merry Christmas. We're like retirement Santa Claus, just giving gifts away all the time. It's really fun to do it that way. So, I mean, we can wrap up here with just a little tidbit. I mean, I mentioned firemen all typically have side businesses too, and most people don't save enough because they don't make enough. You know, if they could make an extra $2,000-3,000 a month, they could put it away towards retirement, retire early or better. It's probably also important for the retirement or for the firefighters who are listening to know that, I mean, I'm actively training, trying to get where there's 25,000 to 50,000 properly trained, just retirement ninjas out there, you know, just third-degree black belt retirement planners. So if you did have an interest in finance or the retirement planning industry, or you liked numbers, or you liked helping people, and you were looking for that side business, certainly would be open to seeing if you want to be a part of the team as well. Great income, incredibly flexible, can build it around any schedule, and you build, you know, residual long-term income with bonuses and a freakishly high annual income. So, you know, having said that, Michelle, if we can help them with their retirement, or to build a side business and make so much money on the side that they jam it away for retirement and they can just, you know, retire whenever they want to. Those are really the ways that we can help firefighters.
All right. Well, thank you so much, Charlie.
Great. Yeah. Thank you so much. Great idea. It's a group of people that I've loved working with in the past. It's actually what I kind of wish I did with my life. Although I'm 48, I probably won't start now, but I really, really think I would have enjoyed it. All right. We'll wrap it up here and then go help those firefighters.
Thank you, Charlie.
Sure thing.
Bye.